Hello everyone, welcome to this month's market update and outlook. Indian equity markets began the year with a sharp decline. The key indices Nifty 50, Nifty Mid Cap and Nifty Small Cap fell in the range of 3 to 5% in Jan 2026. The Union Budget continued its path of fiscal consolidation with a clear focus on lowering India's cost of capital. It highlighted a strong push toward manufacturing, including measures for electronic components, supply-side reforms to attract investments, and policy support for AI adoption, data centers, and rare earth corridor. One notable negative in the budget was increase in STT, that is Securities Transaction Tax, reflecting the government's discomfort with the surge in F&O volume. Moving ahead, early Feb saw two significant trade developments. After over 2 decades of negotiation, India and the 27-member European Union finally concluded their FTA, that is Free Trade Agreement, and it is expected to be implemented by early 2027. Another major highlight was the long-awaited India-US trade deal. The US has reduced tariffs on Indian goods from 50% to 18% effective immediately, providing significant relief to export-oriented sectors and easing pressure on India's current account balance. In return, India has removed tariffs on US goods and pledged to purchase $500 billion of US goods over 5 years across energy, agriculture, and tech. With this, India has signed 8 FTAs in the last 5 years, including 4 in the past year alone. FPIs continued to be net sellers of Indian equities with an outflow of $3.5 billion during the month. Meanwhile, DIIs continued to provide support with net inflows of $7.6 billion. Looking ahead, India's market outlook remains supported by robust domestic demand, easing inflation, and growth-oriented policy measures. Valuations are gradually normalizing and domestic flows remain healthy. However, global factors such as geopolitical tensions and movement in crude price oil will continue to affect the market sentiment. The recently signed trade agreements are expected to improve market mood, especially after sustained FPI selling and rupee depreciation. Over time, these agreements may broaden India's market access and support export-driven sectors, although consistent policy implementation will be the key. That's all for this month's market update. Thank you for watching, and as always, we'll keep you updated with the latest market developments.